evening. Hello and welcome to Capital Market Live on Channels Television. I'm Will Ibong. This week has been a bloody ride at the NGX as the all-share index plummets by 2.28%. That's just what I want to kick off with. The market has been a bit shaky with investors being cautious. Traders are dipping on, selling off, big names. Airtel Africa was the biggest culprit this week. Now, we're looking at other market events and seeing what has impacted the market as well, what's impacting African brands. And Africa has the potential to outperform the rest of the world in economic growth. This formed part of discussions at the gathering of brands experts to unveil Africa's 100 most valuable brands 2023. Managing Director of the Lagos State Signage and Advertisement Agency, Adedamola Dosemo, believes such convergence is imperative for building a global competitive platform, while the CEO of the African Brands Group, Mr. Desmond Esorugwe, is optimistic that the continent is moving into a revolutionary trend so as to compete at the global stage. Let's take a listen.
Imperative for building global competitive platform for brands. Lagos State has done so many activities and functions that would also portray the brand of Lagos in Nigeria, Africa, and around the world. And that is why LASA itself is keyed into giving platforms for brands to showcase what they have and so that they can be competitive all around the world.
Across Africa, very challenging, but it's getting better. The African economy has actually outlived the COVID challenge, and we are moving into a revolutionary trend of business growth across Africa. The growing part is that, the value of brands, determines the market value. The value of brands determine also customer or consumers' preference and recall over time. So it is essential that every brand is driving towards value creation. And most of the brands today have demonstrated that by, creating value, to customers and to stakeholders across board. An organization will continue to value brands that have demonstrated customer satisfaction and have also lived to their brand promise across board in Africa.
It remains to be seen if businesses have really outgrown the COVID-19 pandemic period, because we're seeing a lot of things happening in terms of lower PMI. But let's get right to the heart of the matter. What's driving or not driving performance this week? And we're going to be talking to Mr. Tajuddin Olayinka, Chief Executive Officer, Wyoming Capital and Partners. Thank you for joining us this evening.
Good evening. It's my pleasure.
We're talking about business environment and growth. So we're seeing Stanbic IBTC Bank published Nigeria's Purchasing Managers Index as a PMI of 42.3 for the month of March. That's a contraction from 44.7 reported in February 2023. And we also reported that March figure was a second consecutive drop in private sector business conditions. I want to know, as an analyst who interprets figures from public companies, what do you make of this report?
It tells a whole lot of story, what the economy has passed through in the last 3 months, especially since the commencement of the commencement of currency scarcity, cash scarcity in the economy. So this index actually giving us something to reflect about, something to be something to ponder about, something that should elevate, that should draw reactions generally from economic managers, because if what we had in March was a contraction, and it was also reported that that contraction in March was a second consecutive contraction, which means that even what we had in February was also a contraction. So that was an evidence that business conditions among public companies and even private companies have worsened over this period, and it's something to also make us to now look forward to what we should expect from the GDP figure for first quarter of 2023. Clearly, it was really a bad situation for the economy, especially when you look at it from the angle of new orders from these businesses, especially manufacturing and service sectors. It shows clearly that there must have been contraction among those key variables, that are considered there. So, if again we link that to what has happened to money supply, it's a general problem because money supply also went down in terms of growth. The growth moderated between February and between January and February. And so, if what we had in January and February was what reflected in that particular PMI, then it shows that there's a problem in the economy. In fact, that problem was there, and we should be able to manage it going forward.
Okay, so looking at the PMI now that is dropping below the 50 points mark, which is the benchmark for if an economy is doing well or not, if the businesses are thriving or not. Now, you mentioned the expectations from some of the Q1 results for these companies. Could you elaborate more? What do you think we should expect, seeing that these numbers are not very encouraging?
For those of them in the manufacturing sector, yes, it will affect them, somehow, because what that index indicated was that there was a very deep contraction. When you have 42 compared to 50, that's a very serious contraction, and it was not a one-off contraction. So it's going to affect some of these public companies, especially those of them that that engage in manufacturing and service business. So it's going to affect them. It's going to be a one-off change, though it's not that we will have major improvement between April and June, but in that first quarter we will see some shaky adjustment, especially in terms of their bottom line. It will affect some of these companies, no doubt about it.
What about the bank?
What that indicated was that we must have seen a very, very serious deterioration in velocity of money. So it must have affected them, no doubt.
So where did we get it wrong here? Would you attribute it, because I know you mentioned the cash crunch, would you say is the fault, or is the problem can be attributed to the currency redesign program that the central bank announced?
Yes, I think we cannot take it away from that, because currency redesign program was not much of a problem. But what was the problem was the cash scarcity that came with it. And even if you look at the cash scarcity, it was a deliberate cash scarcity. It was deliberately put together by central bank. They wanted it to happen that way. But it's having cash scarcity with a currency redesign program is not much of a problem. But what was the problem was that CBN didn't come up with a clear-cut near cash alternative that would have been able to put buyers and sellers in proper agreement, so that everybody can be able to buy and sell on the go. Not that you have to start transferring money to you, or have to start using POS or ATM. So the near cash alternative was not there. That near cash alternative is what CBN need to really work on going forward, because that near cash alternative must be on the road exchangeable. It's not ATM. It's not transfer from one account to the other. It's not use of POS. The near cash alternative is on the road exchangeable. It's on the spot exchangeable. It does not require buyers and sellers to have accounts. So CBN must work on how best to situate their digital naira to be able to play that role, because what can play that role is a digital wallet that is on the road exchangeable, not POS, not ATM, not all those transfer that created so much problem or hiccups.
Well, let's not ignore the high interest rate environment that we're having. Currently, interest rate, that's the benchmark, is at 18% currently. We also saw the last AGM for UBA. The bank is talking about slowing loan growth because of the risk of default by customers because of the high interest rate. What do you think? How do you think? Because we've seen Zenith Bank coming up in their results with impairments of over 103 billion naira. Do you think, how exposed are most of these banks to non-performing loans and the risk of defaults for many of them?
Well, we cannot talk about what is known by their books. Most of them came up with especially Chinese bank came up with year-end results or the result, which was not bad. I mean, they were able to make a significant provision, especially with the exposure to Eurobond. I mean, Ghana Eurobond. But clearly, if you take away Ghana Eurobond, it was not much of a problem for Senate, and I don't think it will be much of a problem for most of the banks. But they know how to run through this process. They know that it's a challenge that they have to manage. And I think they are managing well, because I don't. Yes, it could pose a serious threat to their risk assets. But interest rate is something that both lender and borrower must be ready to manage and put in the proper perspective. So I think it's not much of a problem for, and I don't think it will be much of a problem for UBA too. Most of them have been able to run through the whole process. And of course, if there's a default or there's a threat of default, they will make appropriate provision. So I don't think that will be a serious challenge to some of these banks. They understand how to manage this very risky assets.
Okay, so now managing assets, we also saw that, just to chip it in, that UBA is going to be selling the Abuja Disco for $122 million. And we saw that the stock price hit a 1-month high ahead of this sale. So investors are probably preparing and gearing up. They're happy about the news. Are you happy about the news as well?
Yes, I should be happy, because what that means is that, even before they put up that in the public domain, UBA must have made provision for that particular debt asset, that particular asset. They must have made provision for it. It must have been fully provided for in the book. So that money that is coming into the book of UBA is an addition to what they currently have. So it will surely move up their share price, and that is something that most investors like to see. When they see you taking in bounty harvest. So that is not like a bounty harvest for UBA.
Okay, so coming back to the Naira redesign program and what we've been talking about earlier, so in clear economic terms, what advice do you have for the government, the central bank, and perhaps other economic agents on Naira redesign policy going forward?
I think the best advice should be given to central bank. What central bank needs to do is to go back to the drawing board. The electronic wallet, the electronic Naira they have, it's not properly designed to operate, to play the role of Naira cash, physical Naira cash equivalent. It's not on the road exchangeable, because they have to design it such way that it has to be on the spot and not on the road exchangeable. In which case, when I'm buying anything from whoever, and I need to pay cash, I don't have physical cash, we should be able to exchange that wallet, that digital wallet that will make us, seamless exchange of, digital wallet that will make the buyer to know that yes, I'm the one. I'm the one buying. The seller knows that I'm the one buying. The buyer knows that the seller is the one that has that account. So everything we just go into that particular, distributed ledger system. So they have to redesign the electronic Naira to play the role of cash equivalent. Going to ATM, going to whatever you call it, POS, they are not cash equivalent. What is cash equivalent is something that is exchangeable on the road, and that should be that same digital money. And the second thing that where the CBN got it wrong again was, when they started that program, as soon as depositors or whoever is holding this old cash approach the bank or approach commercial bank to exchange that money for new Naira. If I have 100,000 Naira, for instance, you can tell me that you can only give me 10,000 Naira from that physical cash. The 90,000 Naira will go into that digital wallet, and everybody is getting that digital wallet almost at the same time. And so when you have this digital wallet across the country that is near cash alternative, you won't have the kind of problem that they have taken us through. It's possibly a bad situation for central bank, even for the economy as well, because they actually mismanaged a very good policy. The policy is good, but it was badly mismanaged by the central bank.
Thank you so much, Mr. Tajuddin Olayinka. Thank you for the recommendations. I hope the central bank is listening and does take into consideration what you've just said. Chief Executive Officer, Wyoming Capital and Partners, many thanks for your time this evening.
Thank you. It's my pleasure.
Now, we'll take a moment now, and when we return, we'll look at the role of the capital market in Nigeria's infrastructure development. That in a moment. Just stay with us. Welcome back. Now, in its Nigeria Public Finance Review report, the World Bank says that Nigeria's fiscal infrastructure gap would likely reach 3 trillion naira in the next 30 years. And it would take Nigeria 300 years to build world-class infrastructures, and that's still according to the World Bank. We'll be talking to Amarachi Okafor, Health Wealth Management at Norimbeja, to break this down for us. Amarachi, it's good to have you on the program, but I just want to start off with, what is your reaction to this World Bank report?
Thank you very much, Ibom. Good evening, viewers. My reaction will obviously be in the affirmative because apart from that report, several other reports have shown that Nigeria's core infrastructure has been estimated to be around less than 42% of the GDP, right? Which is significantly lower than the global average of 70%. So that, again, is a pointer to the fact that there are gaps in our infrastructural development. More so, in 2022, World Bank ranked Nigeria 132 out of 135 in terms of infrastructural development. That, again, is a pointer to the fact that we are lagging behind so much when it comes to infrastructural development. More so, when you take a look at all the other mint economies, I mean Mexico, I mean Indonesia and Turkey, which are economies that have been banded together and called a mint economy. Nigeria makes the N in it, and you can see that when it comes to all the core infrastructures like ICT, transportation, like water and sewage, like even the health sector, and when you look at other aspects of infrastructure in Nigeria, you will notice that we are far behind when it comes to comparison between us and other mint economies. So really, and to be honest, that report is kind of correct, honestly. And if there's anything that the infrastructural sector or infrastructural development is seeking in Nigeria is the participation of the private sector, which has not been as much as it's needed. And then there's a huge gap between Nigeria and other countries when it comes to infrastructural development.
Coming to
really,
that
report is not far-fetched.
Coming to that, we'll come to that in a bit. Now, we're looking at Nigeria's latest public debt. You talked about the public sector, but we're looking at the huge pile, the ballooning debt, the bloated debt we have in the country, currently at about 46.25 trillion naira. What is the risk of this debt, and how much impact will it affect funding, raised from the capital market?
Okay, so what this expanding debt means is that Nigeria is focusing mostly on subsidizing fuel. And of course, this is not trickling down to the masses because these subsidies provide an incentive for smugglers who take this cheap commodity to other countries where they make more. And then looking at it from another angle, the poorest of the masses only get to purchase like 3% of this subsidized fuel. So you discover that the area that the government has chosen to spend more money and that they've been borrowing doesn't trickle down to the masses. And of course, the masses are more than the bourgeois. So when it comes to this excess debt and servicing of this debt, you discover that the funds are not being channeled properly, and this has a huge impact on government expenditure. Now, there is also the issue of the fact that government is not able to raise revenue that will match our loan servicing expenditure. So this also makes it quite impossible for the private sector to be able to have full confidence and hope that the Nigerian government will do the right thing when it comes to borrowing for infrastructure. So a lot of private sector players shy away from this segment of the economy.
But you talked about the government not channeling the funds raised from the capital market to the needed infrastructure lacking in the country. But we've heard about the Sukuk bonds that have been raised and used to fund, build and rehabilitate roads across Nigeria. I want to know, has that not had any impact generally, in your opinion?
Okay, so it has had impact, but not as much as it is supposed to be. So if the impact was as expected, the World Bank wouldn't tell us that we are lagging behind to the tune of over $3 trillion, and that it will take us up to 300 years to meet up with world expectation or to meet up with the rest of the globe, right? So first of all, this Sukuk bonds has been floated, and a lot of those things suffer because of lack of private-public partnership knowledge, or maybe the expertise that is required for the stakeholders to be able to manage all the variables that are involved in this partnership. So we see that there is low maintenance culture, there is lack of adequate policies in terms of enactment and reinforcement. So the trust is not there when it comes to the private sectors trusting that investing in infrastructural development costs is going to trickle down to the common man and then increase and improve GDP.
So how do we bring in private sector?
If you check out the infrastructures we have, there's really low maintenance culture, and then a lot is not being put in place. Then when it comes to decision making, there's a lot of bureaucracy, there's a lot of gap, there's a lot of corruption going on, and no serious-minded private investor will want to take opportunities in a section that does not have a clear policy on such partnerships.
So how do you bring in private sector engagement, Amarachi? How do you think private sector will be attracted to coming into this, to play into this sector?
Okay, so for private sector to be attracted into playing and funding this sector, I would recommend clear regulations. There should be a clear regulation and clear objective so that there is not much gap between the expectation of the private sector investors and the expectations of other stakeholders, maybe in policy making or in government, right? So I would also recommend that they should reduce political risk. Such political risk that comes with change of government. You notice that a government changes and then the incoming government doesn't continue with the work of the other government, or they change policy that totally destabilizes what has been going on. So there is this distrust. I mean, the private sector cannot afford to play in a field where there is no clear-cut policy, where things are not going to, there is no continuation of projects, and it can lead to some losses for them. And of course, private sector people they are not out to make losses, they are out to maximize potentials for their fund and return to their investors. So obviously, I will recommend clear-cut policies. Then I will recommend that government can find a way to give tax incentives to private sector. It can be a way to lure them into making investments in this sector, because really, as it is right now, there's really not a lot going on. There's really not a lot of attraction for the private sector players to be able to engage in funding of infrastructural projects in Nigeria.
Talking of investments and equity investment at that, we see that Norimberger has acquired 60% of the infrastructure bank. How do you think that's going to play out now? What should we expect now that Norimberger has acquired 60% controlling stake in the infrastructure bank, that's TIB, which is owned by the government?
Okay, so that acquisition for Norimberger marks a strategic milestone in its infrastructural mission, because Norimberger is a company that has the interest of infrastructural development at heart, especially within the Nigerian economy. And of course, that acquisition was done in line with the TIB Establishment Act, which allows for the act that allows for bringing in private equity, private investors or private funds or private capital into TIB's equity. So, of course, that is a step in the right direction, especially for TIB and for infrastructural development in Nigeria. So, it's a step in the right direction, and Norimberger is positioned to stir up the affairs of infrastructural development as a partner in TIB or as a co-owner of TIB. So we should expect some groundbreaking results going forward, because Norimberger intends to bring its expertise into that sector to ensure that things are done better than they used to be done, and we should expect a lot because strategies are in place. And for Norimberger to have won that, that
so
takeover,
we'll look forward to that.
A lot was done, and
we'll look forward to that, Ms. Ramarachi. We definitely are running out of time now. Head Wealth Management, Norimberger, for sharing your thoughts with us. It was great having your perspective on the program this evening. Now, moving on to other stories, we say Sterling Bank PLC on Thursday said it has completed a significant milestone in its ongoing transformation to a holdings company with the delisting, transfer and relisting of all shares to the Sterling Financial Holdings Company on the floor of the exchange. The relisting signifies another major development in the ongoing transition to allow its play in the different sectors of the financial industry. The relisting also represents a strategic move for Sterling as it continues to build momentum and position itself for long-term success. Now, upon completion of the transition, the Sterling Financial Holdings Company will commence operations with 2 banking subsidiaries: Sterling Bank, which will operate as a conventional commercial bank, and the Alternative Bank Limited, which will operate as a non-interest bank. And that's it on Capital Markets. Do join us same time next week. Don't forget, you can watch this again on our channel's television page on YouTube. Also, follow us up on our other social media platforms to get updates. I'm Will Ibon. It's bye for now.